risk report that comes out annually. If anybody has heard of Davos, then you know about the World Economic Forum. Davos is the big annual meeting where all the stars, all the leaders, leaders of government, leaders of corporations sit down and talk about the biggest issues facing humanity right now. And it's a very big event in the calendar, and one of the outcomes of Davos and other meetings of the World Economic Forum is the Global Risks Report, which just focuses on what could go wrong. They define a global risk as an event or condition that, if it occurs, would negatively impact a significant proportion of global GDP, population, or natural resources. So if you hear of a risk, or if you think of a risk that you think should be on this list but isn't, ask the question: is it a global risk? Because they are really focused on what could affect everybody at the same time. One of the things I want to show you, and we will see this again later in the presentation, I'm going to come back and point some things out about it, but I want you to see it now as well, is the top 10 current risks, current global risks facing the world. So this is voted on those 900 people that all gather, and it's split into economic, environmental, geopolitical, societal, and technological. And it makes sense. State-based armed conflict is the highest, got the most votes, almost a quarter of respondents. Pretty obvious because we have wars in the Middle East, in Africa, in Russia, Ukraine, several of them facing us at the moment with uncertain results, possibility that they could grow into larger conflicts. So this is really a list of what's on top of people's minds. I'm going to show you some definitions of the top 3 in the next slide. But there's one more thing I want to say before we move on, and that is, how would a risk manager use this? So I really do use this as part of my role at the moment. Every year we set the risk appetite of the bank, and we do see screenshots, snippets of the global risks report. This is used to inform how we plan for the future, and it'll be used by all banks. This is not secretive information. All banks, a lot of companies, governments use this information to understand what's coming at them, how they should set risk, how they should think about the different aspects, right? Financial, operational risks, and so on. So it's a good environmental scan of what other leaders worry about. It helps inform the risk appetite setting of individual companies. And it may also tell you some things, you haven't thought about, all right? Emerging risks. And that's actually what we're going to talk about today is an emerging risk that doesn't feature highly in the Global Risks Report, and I think it should. Okay. So some definitions just so that you understand a bit better. So these are the top 3. State-based armed conflict, bilateral or multilateral use of force between states or between a state and non-state actor, and quite a wide array. So hot wars, proxy wars, civil wars, several different events. Extreme weather events. I'll let you read the definition yourself, but basically anything that could have widespread damage. I'm thinking especially, a lot of the forest fires in Europe and North America that happen every year and that have become more extreme over time, and the amount of damage they cause as well. And then also geo-economic confrontation. And at first I read that and thought, what do you mean? Economies compete with each other. So what exactly does it mean? But this is really tariffs. This is sanctions, tariffs, trade controls, currency measures, anything that a country, any lever a country can use to give itself an advantage in certain industries. and prevent competitors from taking the opportunities in front of them. So these are a lot of the things we're seeing in the news this week. So it makes sense that it's so high on the list, and probably since this report was produced earlier this year, this has probably gone up. Okay. I also want to show you the Global Risks Report has a current list of top 10, and then also has a long-term a view of global risks. So this is the 2035 version of the previous list. And I'm not going to speak a whole lot about this. I'm really going to focus more on the list of current risks and how I think they could change over time. But if you look at what those leaders said about the things that will come to make us really worry, it's mostly environmental. The top four are all environmental risks in their minds. The purple ones are technological, so they're also worried about AI, just because it's quite uncertain what direction it's going to go. It also includes misinformation and cyber warfare. And then the third little grouping there is the red part, which is societal. So inequality and societal polarization, basically, groups of people splitting apart in terms of ideas and that causing a rift between them. So this is the list of top 10 for the future. You'll see there's no geopolitical. Geopolitical events tend to have been very quiet for several decades, and suddenly they are top of everybody's mind. But yeah, they don't feature on the long-term list of top 10. Okay. Now I want to focus a little bit more and get closer to what I really want to talk about today. In the Global Risks Report on the 2035 forecast, they do a deep dive on a couple of different areas. And one of the areas they deep dived into was super aging societies. They see this as a background factor to a couple of different top risks, but not one of the top 10. So they see it as a background factor for risk of insufficient public infrastructure and social protections. They think that populations which are aging very quickly are going to affect these global risks, and that we should be aware that this is a much bigger trend that's happening in the world, that societies are getting much older. And I 100% agree with this, but I think that the WEF could have connected this to many, many more risks, including some of the top 10 risks. And that's what I'm going to try to do in the rest of the presentation. And I'll take a step back in a second. But first, I need to explain, what is this image you're seeing? You're looking at a color-coded map of the world that shows countries with the oldest populations, anywhere between that have anywhere between 14% and 28% of their population who are 65 years and older. Any country that's in gray, including Bahrain, I believe, doesn't have at least 14% of its population 65 years or older. It's a younger country in this definition. The darkest color there is Japan. You're going to see Japan a couple of times in my presentation. They are further ahead than most countries in terms of an aging society. And they give us a little glimpse of what's coming for many other countries that have a slowing birth rate, an aging population, and a lowering death rate as well. You'll see most of the countries are in Europe. The darker ones are in Scandinavia, in Germany, in Italy, and including the country I'm living in at the moment, Netherlands. There's three immediate impacts of super aging societies from the point of view of the WEF. I'm going to talk a little bit more about my perspective next, but I want to explain what the WEF thinks. They see an impact from super aging societies on pensions and state finances first. What does that mean? Well, pensions all around the world have really been set up with the idea that you have a large group of younger people paying into a state pension or a employer pension, and that is supporting the retired population of a country, which is normally much smaller. That works very well. That system works very well until your young population shrinks because of declining birth rates, and your older population, because lives are getting much longer thanks to advances in medical care, that pension system doesn't work very well anymore, because your young people now need to pay a lot into the system, and it's not going to them, it's going to a much older population, and that can cause a lot of issues. It's exacerbated when interest rates are high. So at the moment, I don't know if you're reading it in wherever you get your financial news from, but I'm reading a lot about how interest rate charges are one of the biggest expenses for a lot of governments around the world. Sometimes in the top 5, right? Behind defense and social programs, it's often interest, just paying the interest on the accumulated debt of the country. So if we continue to see aging populations, that problem only gets worse, especially if you have high interest rates continuing. Okay, the second impact from World Economic Forum is labor shortages, especially in long-term care. I agree, of course, if you don't have young people, working age people, who's going to do the jobs? There's certain things you can do. You can extend the retirement age to qualify for full benefits from the government or an employer. And sometimes that can work, where people will stay longer in their jobs as long as they're healthy, to prevent labor shortages. Because at the end of the day, you still need people doing things, especially in something like long-term care. Maybe not so much in technology, where things can scale and one person can design an app used by millions, but in long-term care, you have one-to-one care. So if you don't have enough people, it shows up very quickly in that area of the economy. The third impact that the WEF note is, if this continues, and if this trend happens not only in advanced countries, generally advanced countries, but also starts happening in developing countries, where you see birth rates decline. And when I say birth rates decline, the worrying point is 2.1 births per woman. Below 2.1 births per woman, your population cannot sustain itself. It starts to shrink. It may take time for it to shrink, because as births are declining, lifetimes are getting longer. So for a time, populations will increase. I mean, the world, I'll show you the population of the world in a slide or two. You'll see that it is still increasing. However, the birth rate per woman is very close to 2.1. And once it gets below, you will see population declining. Their last point from the WEF is really that if this continues, you really will see a lot of economies struggling to survive. You can't simply have an economy that has a super aging population, immigrate a lot of workers, if all countries are facing this issue. That where are they going to come from? So they do see some really long-term impacts that I agree with, and they've obviously deep dived on this topic for a reason. It is a concern to a lot of people. Okay, now for the next couple of slides, we're done with the WEF. I've explained what they think. I've explained their top risks. I really want to give you my explanation of this and some background to help you understand what you just read, and then we'll connect the two in a few slides. I don't know about you, but when I first learned about population demography, it was in geography class, I think, in junior school, and I saw a chart very much like this, very simple one. Let's focus on the green and the purple line first. So, birth rates in an industrializing country, the birth rates are still very high. But once people start moving into the cities, start working in factories and so on, your birth rates decline very quickly. And death rate is already very low because of medical advances, vaccinations, and so on. So the theory is in an advanced country, you have a low birth rate and a low death rate, and your population growth is very stable. And you can see the fourth stage in this chart is low stationary. There wasn't the idea that populations could decline outside of war and disease. But you're going to see that this very simple way of looking at population changes doesn't always make sense when we see the actual data and actual forecasts of what's going on in different countries. And of course, before I forget, this doesn't include immigration, right? This is domestic births and deaths only. Of course, immigration is one temporary solution to this, as long as there is willingness from the population. But I'm not going to get into that more. I just want to point that out here, that there is that lever. I want to show you what a real country looks like. You saw a simplified version of these stages, but what does it look like for a real country? And this is China. So, their death rate has been quite low for quite a long time outside of famine and disease, as you can see on this chart. Their birth rate was much higher, which caused the government to introduce the one-child policy back in the late 70s. They were very concerned that population is just going to go through the roof, and how are we going to feed all these people? How are we going to have jobs for all these people? It was a deep concern to the government. However, since then, you could argue the policy worked a little too well. And even after relaxing the one-child policy and introducing a three-child policy, I think roughly in the 90s, the birth rate in China has continued to decline and decline and decline. It sharply dropped during COVID. So if you look at 2020, you do see even further declines in birth rate, and you do see an increase in deaths, probably because of COVID. So this is what it looks like for a real country. And China has been in population decline for 2 years so far. At this rate, it doesn't look like those two lines want to come back and meet each other. So it looks like quite a for the foreseeable future, China will be in population decline, and I'll give you some stats on that in a little bit. Okay, how does population change? So I told you I'd show you the world population and how it's changing over time. All of this data is from the UN. This is from a team of expert forecasters that revise their forecasts every couple of years. So these really are the best of the best when it comes to this type of data. And I every time I present on this topic, I include this chart on the left because I think it's so interesting. Even though it's very simple, it looks very simple. First of all, world population was assumed to hit very close to 11 billion people in the 80s, 2080s. So, 50, 60 more years of population increase before it starts to decline. You'll notice one thing, it doesn't stabilize, like the very nice demographic transition a model shows us, it really does decline, and that decline increases as the years go by. So that's the first thing. The second thing, in 2024, which is only 2 years after the previous revision, that's not very long, the peak population has moved earlier, a few years into the early 2080s, mid 2080s, so it's changed. The decline is still there. It's probably even, it's hard to tell here, but it's a little steeper once you get to the year 2100. And the reason for the change is most interesting. It's not because of COVID. It's not because of Russia, Ukraine. Those were very minor factors in the revision, the 2-year revision here. It was because expert forecasters underestimated the decline in birth rates. They revised their model to take into account that births are actually slowing even more than they thought they were. That is the reason for this difference in the revision. To me, that is fascinating. That really means that it is an emerging risk that we should keep our eye on and understand what it could impact. Okay, I thought it would be interesting to look at the country level, and personally, I'm fascinated with this data. It's always interesting to look what's going on underneath the world population level. So you're in Bahrain. I thought it would be interesting to put the Bahrain population chart in there. It's the opposite of every other country in there. Your population is increasing quite steadily, expected to double in the next 75 years. Quite a big difference in the revision as well. I don't know what's driving that. I wasn't able to look into it. But if you look at the other three, and these are all classic super aging societies. Japan is really the first. It's been in decline for. It's been an overall population decline for 17 or 18 years. So meaning the total population has been declining that long. The working age population has been declining a lot longer, 30 or 40 years. And it's expected to continue, although the decrease is not as bad as some other countries. So it is decreasing, but it's not a sharp decrease. It's losing people a little bit slower. And you'll see the revision is actually upwards in Japan. So that's promising for them. South Korea has the lowest birth rate in the world. I think it's about 0.7 births per woman. Very, very low. Remember, 2.1 is replacement. 2.1, you have a stable population. South Korea is 0.7, 0.8. It's not even half. Their population will go down by more than 50% in the next 75 years, which is only 3 generations. That is really a sharp drop. Germany, much closer to home where I am in Europe, they are in decline already. South Korea has, if you look at South Korea, they're already just about to start declining. So we haven't seen a lot of the impacts there. Germany is in decline. I don't know, I can't remember for how long, but it really is in decline. Like Japan, it's not a sharp decrease, but it is quite substantial. And is behind the thinking of the government to immigrate more people. There's no doubt about it. Governments know this is a real problem if it's not somewhat controlled. I would yes.
If you don't mind me interrupting, we have a question from Josim. He says, all domestic births and excluding immigrants. Is that right in the chart?
In these charts, this is everything. This is immigrants. This is everything. So this is the entire population of the country. But this one does not include immigrants, the classic model.
Okay, excellent.
Yeah.
Thank you.
Yeah. And I'm going to speed up a little bit. I realized I'm a little behind time, and I don't want to run out. I want to quickly show you one country that changes in 3 different time periods. And be ready with your mute buttons or your answers to Nadia, because I want to quickly ask what country this is. These are population pyramids. They're fascinating to look at. Just quickly, the blue lines are males, the pink lines are females. The age brackets go on the left side, the y-axis, all the way from 0 to 100. And this country in the year 2000 had a very large population of 25 to 29-year-olds. That's a good sign. Young, working age, consumers, good for the economy, good for pensions. 24 years later, about a generation, they were 50 to 54 years old. You see them right there. That's what the arrow is pointing out. They didn't have a lot of children, and their children didn't have a lot of children. So you'll see it's a pretty sharp decline all the way down, and you can see their population has decreased by 3 million people from 127 to 124. And their long-term forecast, so this is the same data we've been looking at the past slide or two, the UN data. They will have much fewer people, so 50 million fewer people, and a very small base. So this is proportional. So compared to the other lines, the 0 to 20-year-olds don't make up a lot of the proportion. A lot of the bulk, the volume in this population pyramid is right at the top. Okay, to speed things up, I won't ask actually for a guess. This is Japan. This is Japan's evolution in the past generation and going forward the next 3 generations. This is what it looks like at the country level. So you've got men on the left, women on the right. You've got in the 1950s, 60s, 70s, you've got a classic pyramid shape. A lot of young people, not so many older people. Above the dotted red line is retired people, so 65 plus. So pension funds can sustain themselves when they have this many people paying in and not that many people to support. It gets much more difficult if you look at the 2100 line, because it's starting to look like a bit of an onion. You've got a huge population of retired people above the line, a good amount of working age people. Again, this is across the world, so a lot of the countries below this level will have very healthy demographics, and a lot will have super aging demographics that are very difficult for individual countries to support. So this might not look too bad at the world level, but you've already seen what happens at the country level. There's a wide variation, but you're already starting to see at the world level. I've pointed out with dark blue lines, so it's easier. You're already starting to see shrinking number of young people globally. And again, as I pointed out, that's going to make life very difficult for economies that were built to support a certain shape of demographic, and now that shape is changing. Okay, I want to join it all together in the next 5 minutes, tie a bow in this. You've seen this before. I'm bringing it back because I think demographics, and especially declining birth rates, are behind or related to more of the global risks than the WEF thinks. I think, and there is quite a bit of support to back that up. So if you see a green circle, there's good support for the case that demographics are connected to this global risk, so geo-economic confrontation. And I'm going to describe it in the next slide. If you see yellow, there's sort of mixed evidence, sometimes not. And if you see red, well, it's weak. However, I left it in there because I think at least one country is showing us good evidence for this, and it's just not widespread. Sorry. Here's the same information, but with a little bit of examples, descriptions. So, you've got state-based armed conflict. Well, this is how demographics could impact this particular risk. And you can judge for yourselves whether you think it makes sense or not. Aging populations reduce military capacity. I think that makes sense. Examples are Korea, Germany. Those countries are focusing more on technology, on drones, on other ways of automating defense, but not having enough people, especially military-age men, does weaken the capacity of a country. The second one is very interesting. Think about this. A narrowing window for power projection can increase aggression before demographic decline sets in. So, and the example I give is Russia, because one of the theories is that a country that sees its population is falling and that it's not going to have as much military power in the future may pursue goals quicker, earlier, because it knows in the future it won't be able to do this. So, of course, that's not the reason we were given for the war, but it is sort of interesting to think about as a background factor. Geo-economic confrontation, remember we spoke about that earlier, that's tariffs, any kind of levers that governments can use to make themselves more competitive. Well, if slowing growth caused by fewer people, it pushes countries towards protectionism. They want to protect what industry they do have left. So Japan definitely does that, does protect its car industry and others because it needs to export. It can't rely on its domestic market, and that's the second bullet. If you have less and less people to buy your stuff, you really need to look elsewhere. Societal polarization. Well, you saw the pyramids. If you've got a lot of young people don't vote as often as older people, but they vote in certain ways. Older people vote in different ways. Older people will have more influence over elections in the future. I think that's undeniable. And this deepens a generational divide as well. The example I gave is, France has been attempting to raise its retirement age for many, many, many years. I think it's quite low in Europe, in France, 61, 62 years old, and it can't sustain its pension funds that way. But people protest when it tries to raise it because, of course, people don't want to work for longer. So this is related to polarization. Economic downturn, of course, fewer workers, plus more dependence, supporting older generations that have retired. It is a real strain. Skipping forward, the one that's a bit weak is lack of economic opportunity. But if you look at Japan, both of these things are true there. Older workers do stay in their jobs longer, which limits the ability for younger workers to be promoted and move up. And young people are often stuck in non-regular, low-quality jobs. So, think of your food delivery person. These are not really career paths. These are just jobs. And this happens in Japan. It may not be happening elsewhere, but Japan is ahead of other countries in terms of its aging population. And inequality as well. You are going to see a wealth gap widen up if older people hang on to their assets in Japan, because real estate prices have been very stagnant for 30 years because the population hasn't increased. People hold on to their assets. They don't, or try to invest elsewhere. There's not as much willingness to take risks, to invest in innovation, and this fuels discontent. And the example I have is housing prices. I mean, almost everywhere, right? A lot of younger people are complaining they're too high, and part of this is because of demographics. A lot of older people are holding on to homes that are probably too big for them, and they're not willing to sell. But yeah, so there is an inequality relationship as well. That's the end of my presentation. I'll quickly go over my Premier involvement. I think I can do that quick. So Premier, we have 50 plus chapters worldwide. What is a chapter? It's really people all in the same country or city that either have the PRM or ORM designation or, have some affiliation with Premier. It's a nice way to socialize. It's a nice way to learn more about different types of risk. I'm part of the Netherlands chapter. It's a great networking opportunity, and nice to stay in touch with colleagues. And it also served me well because I moved from Canada to Netherlands 2 years ago. My first call was to the Netherlands chapter director, and he was very willing to have a drink and tell me about the Netherlands and introduce me here. So our chapters are vibrant and exciting. And I'm on the Global Council, which supports chapters, helps them find speakers, helps them stay active. So I really support this as much as I can. There's almost weekly webinars at Premier, a lot of thought leadership that comes through. So it's a good way to stay up to date. There's plenty of volunteer opportunities, and those are some of the ones I've taken on. Nadia mentioned at the beginning, the first time we met was because of Premier Intelligent Risk. Nadia submitted an article to us. We publish articles written by PRM holders every 3 months. We work with authors to refine their ideas and make sure that people are going to read this material and use it. And it leads to future webinar opportunities, speaking opportunities. So it's a nice way to support our PRM holders internally. We also have a LinkedIn group. So I'm going to give you a QR code for that in a second, but we're trying to build out a LinkedIn community of intelligent risk readers and contributors. So if you want to stay up to date with what people are writing, that's a very good way to do it. So as you can see, you might not have heard of some of these benefits on a brochure for Premier, but in my 12 years with the organization, there's a lot of intangible benefits. The opportunity to co-edit Intelligent Risk came out of nowhere. That definitely wasn't in my brochure when I signed up for the exam. And it's been a very fulfilling experience and has enabled me to meet people like Nadia, who have invited me to speak to you today. So it's funny the way things work out. So Premier has a lot of these intangible benefits you may not understand at the beginning. Nadia, I will hand it over to you for the next 3 slides.
Thank you, Carl. Thank you for the informative presentation, for linking the emerging risk by World Economic Forum to the population growth. I found that very enlightening, to be honest. So let us just tackle what's happening with the risk certification, because some of the people who logged in here today, they just want to know the new developments. And something remarkable happened last week with the PRM designation. They have given more exemptions to university exemptions and to professionals. So if you want to know what are these exemptions, you can call banking@bibf.com. You can just email us or just call the team here. You know the number. And if we can go to the next slide, Carl, if you don't mind, thank you. You will notice that one of the most remarkable exemptions that have been done recently last week is that they introduced a new pathway to the PRM. So basically, if you complete your credit and counterparty risk and the market and liquidity and asset liability risk management certificate and your operational risk management certificate, you can obtain the PRM level 2, I believe. Now, we do offer the ORM certification currently in BIBF, and the remarkable thing about it that it is taught entirely in 5 working days, and we can run it in the morning or in the evening, so it can be like a normal training course. And we will be offering the market and liquidity and counterparty risk next year, hopefully. However, if you're interested in doing that, you can also directly just open Premier.com. You will see a direct link to register to these exams. If we can go to the next slide, Carl, please. Thank you. Now, currently we have 3 certifications. As you are aware, we have the PRM, the APRM, and the ORM. And I just want to take you down below for the number of hours that you will take in order to study and submit your examination. So if you notice, the maximum time that you will take is actually for the PRM. It will take you a year. To be honest, I believe it took me and Carl almost 2 years to finish everything back in 2014. And I want to believe that it has become much easier to study and complete everything in 1 year. It depends on your perseverance and persistence in studying the material. Now, the APRM is a good way to start. It's only 81 hours and it's written for months, but sometimes we get requests from students to shrink it down, so we can actually complete 81 hours in 2 months. The easiest one to attempt is the ORM, which is, like I said, 30 hours, and it's based on request. It can be in the mornings or the evenings. So this is just what is happening with the risk certifications. And just to wrap up what Carl has been saying, I hope that this presentation was really useful today. As risk managers, we should always relate on what's happening with the upcoming risks and how they would impact our risk appetites, our ICAPs, our even ILAPs, the internal adequacy reports that we write. And you're absolutely right. One of the most alarming risks is the population, because they do impact indirectly all the risks that you have seen on the list published by the World Economic Forum. Any questions you have for Carl, you are free to unmute yourself or write in the chat. Any questions? You can also scan the QR code for the LinkedIn, right, Carl?
Yes. Yeah, the bottom one will take you to our LinkedIn group. These are risk practitioners. We approve everybody who comes in, so we try to keep the conversation really high quality. We ask all of our writers to join the group, and they are the ones that post. And we hope you'll comment on what they post, but we really try to have a really good conversation by experts. So please join. Yeah, and if you want to stay in touch with me personally, I also put my LinkedIn QR code at the top. I'd love to hear from you.
Excellent. Josim has a question. Just 1 second, Carl. You can
Hello.
unmute yourself. Yeah.
Am I audible?
Yes.
Hello, good evening. Thank you very much, Mr. Carl and Nadia, for the informative session. This is Josim. I am the manager of the risk management department at Solidarity Bahrain and Insurance Company. I just have a few questions. In your opinion, Carl, how often should we examine or gauge the impact of emerging risks on our companies? Would it be like on a yearly basis would be enough? And what other sources that we can rely on in order to find these risks, like other sources other than the WEF? Are there other forums or statistics that we can look at?
Mm-hmm. Very good questions. I think large corporations, banks should, and they do it every year. I even think the regulators really encourage that in them. But of course, there should be proportionality. Smaller companies probably don't need to do it as often. It is expensive to have a group of people in your company focus on this and go out and understand the research and incorporate it into your risk appetite statements and so on. But yeah, I think annual is the right frequency for most companies. Yeah.
The thing is that our regulator leaves us actually to us. There is no like a standard or requirement to do it.
Okay.
Our frequency that we should do it. We are doing it just by ourselves, like we are going the extra mile of identifying these emerging risks and gauging their impact on us.
Okay. Yeah, I would still say annual is probably good. What I've seen at previous workplaces that were a little smaller is that they would maybe do a a larger exercise every 3 to 5 years when they update their operating plan, which is normally runs for 3 or 5 years, and then annually they would do kind of a mini version. So they would scan. They might look at the global risks report. They may look at a couple of different sources, and not spend too long on it. And if a regulator is saying, well, it's up to you, then they just want to see that you have a defined approach, right? That it's not random. So I think doing a smaller exercise every year would be perfectly acceptable. Your second question, very, very good question. Large banks all have economics departments that really deliver research that is targeted towards what we do. So Rabobank is a global agriculture bank. Our economics department really focuses on what's going on in agriculture and how will that affect us. So larger institutions, economics department should really lead this, and they should be the source. They will know where best to gather information, and they'll have paid subscriptions for sources. But yeah, in smaller corporations, places that don't have an economics department, this is a good start. But the global risks report is very high level. You'll notice that, right? It's not specific to Bahrain. It's not specific to Middle East. It's very global. So it's better to find think tanks. You can find a lot of public research by the banks, focusing on different regions. So that's a good place to start. That material is free. I think that's the best I can do with my understanding. I'm more of a consumer of some of this information in my current role. I don't have to go out and look for it as much. Yeah.
Excellent. Thank you, Carl. I just want to add to Jassim, because we in Bahrain, what we do is additionally, you're absolutely right. We have the economic departments that they do this research. So as risk managers, I believe we don't do that firsthand, because it will become overwhelming if we also have to do the economics part of it. And we depend a lot on the Economic Development Board, EDB. This is a government entity we have here that they do research when it comes to the risks. And personally, what I do as a risk manager is, and I think you also do it, Carl, is that we do open the on YouTube, the Davos videos, what goes on. We do listen to all these discussions to get insight. So that could also help. What do you think, Carl?
I agree. And I think I forgot to say something, and you reminded me. The value of a risk manager is really to take in that information and interpret it for our company and our front office, the way it operates. So we definitely have an interpreter role in not just taking that information and believing it. I think you should know what the World Economic Forum is all about. Well, there's a lot of people contributing to it, so it really needs some more interpretation and critical thought. And that's what I was attempting to do in this presentation, is take what they've put out, but then saying, well, is it correct? Maybe there's more to it than this. So I think that's where risk adds value.
Yeah, a lot of critical thinking we have to do now, on the contrary to risk managers 20 years ago.
Yeah.
So I hope we answered that question, Jassim. Any more questions from anyone? So I believe there is no more questions. So thank you so much, everyone, for attending. I really appreciate your attendance. And I want to personally thank you, Carl, for being here today, for accepting our invite. I must say, I speak on behalf of everyone. That was a very informative presentation. I personally, as a risk manager, found it very useful. So thank you so much. And hopefully we'll see you in future webinars. Thank you.
Thank you, Nadia. Thank you, everybody. Bye-bye.
Thank you. Thank you, everyone. Bye-bye.